How's it, traders? Winston Goods here, aka Mr. Mayor Forex Trading. Please, guys, today we're going to have a very interesting discussion, a very interesting trading strategy I want to show to you guys. For those of you who are interested, please have a look at this video. If you find value in it, then chop. And remember to read the disclaimer. Alright, so let's get into this. Now, for those of you, I have been under a lot of work pressure, so I haven't been online in a bit. I don't trade when I've got a hectic work schedule. I believe when you trade, you need to have your full focus of trading. Now, you guys do know I like to trade long term, daily charts, 4-hour charts, and I work on price action. But there are some guys that asked and said, no, they starting off with trading, so they're not comfortable with just pure price action trading. You guys know I don't like to use indicators, but let me show you a very simple trading strategy. This is on the 1 hour time frame, and this is the euro versus the US dollar. So the reason I use the 1 hour is because, yes, it is a faster moving time frame, but it's not too fast. It's not as busy as the 1 minute and the 5 minute time frame, which can also confuse people a lot, especially if you're a new trader. And it's also not it's not really slow because it's not 4 hours in 1 day. So for those of you who've got time and can sit in front of your device and trade, use this trading strategy. If it works for you, that is awesome. So let me start. 1 hour time frame. I've got two indicators here. I've got the 200 EMA, exponential moving average, on the 200. Make it any color you want. And I've got the 69. Nice, I know. Alright, so it's a 69, and you make it also different color to your 200 exponential moving average. So let's look at when you would buy. There's a couple of rules to this, but stick with me and you'll see you can make big profits with this thing. Alright, so rules for entry. Let's start. Let's move back on this chart. When I jumped into this trade, I took this trade all the way up to there, and I got stomped out there. Let me show you what I did. I wait for price action. Here we are. For price action to break above the 200. Use your 200. I wait for price action to break above the 200, and I'll wait for the 69 to move up above the 200. Now I'm looking for a buy entry. When will I enter this trade? As soon as price action touches the 200. It has to touch the 200. As soon as price action touches, I did a buy. So you can see here's the line where I did my buy, and you can either do a 1 to 2 risk to reward, or you can do just a trailing stop. Now, where would you place your stop loss? Your stop loss will be at the recent swing low, which is right over there. You jumped in there, so that's where your stop loss will be. Now, if you're doing a 1 to 2 risk to reward, this is 46 pips. So your risk to reward will be 92. So you will be basically 92, right over there. So you would have hit your take profit right over there if you do the 1 to 2 risk to reward ratio. But I like to trail stop. So once price action jumps above does a break of structure. So here I can see there's a recent high. A break of structure, so that to me is a valid bottom. I will move my stop loss up to that there. So now I'm waiting for another break of structure. So there's a recent high. I see price come down and whoop, break up, break of structure right over there. So this to me is a valid bottom over there. I will move my stop loss up to there. Yeah, now I'm waiting again for another break of structure. Zop, shot right up to there. So this to me is a nice break of structure. So I move my take profit or my stop loss up to there. Here I can see price is going to consolidation. There's no big movements. It's consolidating. And I saw that price break below the 69. This is where I jump out of a trade. As soon as price action breaks below or above the 69 at the end of that candle, that's where I jumped out and I ended the trade. So from there to there, this is a nice. Let's take a quick gander at this. So there to there, this is a nice 160 pip increase on my account. 160 pip. That is a great trade, I would say. All right, so let's look at when will you sell. How would you sell? When will you sell? Let's move this one over because I like using this red one. All right, so let's just move these. Oh, I'll get another white one. That's fine. Oh, there is a white one. Oh, there. Okay, because that's where I jumped in. Okay, I did this sell over here as well, and this was to me was a great profitable sell. I didn't expect it to go so well. This one, I thought it was just gonna do a little bit. But all right, so on a selling point, I wait. Let me just get closer so you guys can see it. All right, so I'll wait for price action to break below. Now here you can see price action did break below, but my 69 is still on top of the 200. So I do not take these sells. Even if it comes there, I will not take it because I wait for the 69 to also be below the 200. So here price comes back up. It broke through there. I saw, all right, it breaks properly, and I saw, okay, the 69 is also below. So what I'm waiting for now, what I waited for was a price action to come back and touch the 200. It touched it there. I jumped into the trade there. My stop loss was just above there on that one. Now this one was a profitable. Now here again you can do a 2-to-1 risk to reward ratio if you want to. So let's take that one there. That is let's say 56. So it's 112. Will be right about there. So you would have hit your take profit right over there if you did a 2-to-1 risk to reward ratio. But I like to do follow stops. So I saw price action breaking below. There's no break of structure, so that to me is not a valid low point. I didn't move my stop loss down to there. I need to have a break of structure. I need this recent low to be broken. Then it to me is a valid top or a valid point to bring my stop loss down. So I waited, I saw price come back, and there we have a break of structure. It popped out to the upside, another break of structure. So there you would move, I moved my stop loss down to there, onto that thing there. I saw it come back up, whoop, break of structure over there. So I moved my stop loss down to there. And so I continued on. You see break of structure there, it broke there. So there, break of structure again. So this is now the recent high. This to me is a valid place to bring it back. Alright, we didn't have, because there's a recent low there. This one didn't break structure, so that's why I didn't move my price, my take profit down. Here it broke structure over there, so I waited for it to make a top and break structure again. They broke structure, so this to me was a valid point. And I saw it break structure there. Now I'm just waiting for it to break structure again to make a new valid point for me to bring back. Yeah, I thought, oh, it's working on this. I think I'm gonna have to jump out, but I didn't. So I saw it coming down, and there it broke this recent low here. So to me, this was a beautiful break of structure. So that was the next point where I could move it to. There we had a break of structure of this one over here. We had the break of structure, the up there, break of structure. So I moved my stop loss to there. We did have a little bit of a break of structure there, and that's why I also moved, I think, yeah, because I got stomped out here somewhere. I just had it here. So there I saw, all right, low break of structure, that's good. Whoop, break of structure over there. So this to me was a valid place to bring it to. I put my stop loss there, and with this up move, I got stomped out there. Now, let me show you quickly what the pips was on this one. It's from there all the way down to this area here. 258 pips. It was a 258 pip move. Just this one move there. I hope this strategy makes sense to you guys. Please, if you need more help or need me to explain this in more detail, comment down below and I will definitely explain it a bit better in detail. I just wanted to go work through this so you guys can get a rough idea. First, go and try the strategy out on a demo account. See if it works for you. If it does, I'm happy for you. And then, you know, we can continue on trading. From my side, Winston Coetzee, Mr. May Forex Trading. Please like, share, and subscribe to the channel. And I would like to see you guys again. Cheers, cheers.